Tonight, the SEC says that it is actively monitoring market volatility after certain stocks like GameStop have been soaring, fueled by amateur day traders. A new generation of investors using their phones and communicating on Reddit are creating chaos on Wall Street and also exposing potential flaws in our financial system. Rebecca Jarvis has more.
They're young, stuck at home, and looking to beat the odds. But these are not your typical wolves of Wall Street.
At the tender age of 22, I headed to the only place that befit my high-minded ambition.
In the last 24 hours, from their dorm rooms, basements, and frat houses, these next-generation investors have sent the financial world into an absolute frenzy.
I'm not going to give any advice to the Wall Street Reddit crowd. They're making a lot of money.
Pushing stocks like GameStop, a company that closed nearly 800 locations in the last 2 years and isn't expected to turn a profit until 2023, to unthinkable heights. Today, worth more than $24 billion.
What we have is the perfect storm of stimulus money, a cohort of younger investors, and we also have these platforms that encourage sort of these weapons of mass trading as it creates, if you will, this explosive upward effect.
Cameron Bublick is a 20-year-old Rutgers student who's been playing the stock market during the pandemic.
Every day when I wake up, I check, first thing I do is go on Robinhood and check out the app.
With the Robinhood app, Cameron can trade as many times as he wants without paying fees.
How do you get your ideas about which stocks to buy?
A lot of it, to be honest, is very impulsive. A lot of what people do is basically, gambling on this.
And Cameron also gets inspiration from a community on Reddit called WallStreetBets, followed by more than 3 million readers who spend 24/7 talking stocks. WallStreetBets is how 19-year-old JP Hurtado first discovered the idea to buy shares of GameStop.
I check it like twice or 3 times a day. I saw GameStop popping up on the front page around December, in the middle of December.
The University of Illinois at Chicago student, who says he'd never owned a stock before last year, says WallStreetBets made a compelling case. There were posts about GameStop's new hires and rumors of smart financial moves.
I think for GameStop, at least, this is great for GameStop.
But that was just part of the appeal. Members of the WallStreetBets community had also exposed a serious vulnerability they were going to exploit. In posts like this one, titled Bankrupting Institutional Investors for Dummies, featuring GameStop, it was revealed that a number of influential Wall Street hedge funds were betting heavily that GameStop would crash. Known as shorting the stock, these industry titans had borrowed heavily to sell shares of GameStop, thinking they'd be able to scoop the stock up later at a lower price. But when investors like JP and Cameron started piling in, GameStop went up, way up, instead of down.
Well, they're pulling it up by posting about it, more people buying it. Do I think that GameStop is worth, $220 a share? No. I know personally near where I am, I've seen probably 4 or 5 GameStops shut their doors within the last year. The stock's only worth as much as people think it is.
When people see something going up, they're going to have a fear of missing out. So because they want a piece of that pie, they're going to hop in. And because more and more people keep hopping in, the price keeps going up.
That sent GameStop, a company trading at $4 a share a year ago, on an eye-popping tear, up more than 1,600% this year, more than doubling today alone to close at $347.51. Tesla's Elon Musk even tweeting about the dizzying ride.
You've saved up and you put the savings into GameStop. And you're smiling.
I made money on it.
The Wall Street elite on the other side of the trade, those who'd borrowed money to bet on GameStop's crash, were suddenly squeezed, forced to buy back the stock at much higher prices than ever imagined, losing billions in the process. Some even vowing to fight what they've called an angry mob of young traders.
The question is, do these retail investors understand what they're doing, and does their outsized influence represent risk to the markets? Do we have a new level of systemic risk injected into the market by individuals that appear to be more gambling, if you will, than actually investing?
And now the same thing is happening in other stocks, too. Companies like BlackBerry, Build-A-Bear, and AMC. And if the whole thing sounds too good to be true, bets, perhaps as entertaining as it is risky.
Well, I would approach it the same way you approach it going into a casino, and that is you're not investing, you're gambling. And the history of people building economic security through this type of trading activity is pretty rare.
Even those playing seem to know the odds won't always be in their favor.
I've seen people lose their life savings or college funds, not be able to pay their loans off. I never want to put myself in that position.
Some FOMO, fear of missing out, playing out on Wall Street. Our thanks to Rebecca for that.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.